Hi, fellow traders. Great to be back with you again. I know my video output has gone down, but obviously I've been working on making sure that everybody in our new Average Joe Trading community is getting everything they need and that everything is working smoothly. So as that transition continues to progress, I'm going to have more time to do videos and get back and start doing some more recap videos. But today I wanted to share a lesson with you because I've been working with a lot of traders over the last couple of weeks, and I really felt inclined to share this with you. And I think it's very, very important. So even though I know lose is not one of the tag words that brings everybody to the yard, but don't walk away, don't leave. Try to get as many of your fellow traders who are new, who are trying to get their bearing, to come take a look at this. And don't dismiss it, please, because I feel that it's that important. But before we get into it, I want to remind you I'm live on YouTube every day, every morning during the week from 8:30 to 9 o'clock. I'm building my watch list, and you can see it on my YouTube channel, or you can go to my website averagejoetrader.com, and on the home page there's a screen. Once I go live in the morning, you can maximize that and you'll have the full window view of me building my watch list. So if you don't go to my YouTube channel, if it's easier just to have my website up, you can get it from there. Our new website should be up by the 1st of March, and you'll have that same ability on the new website. The other thing I want to share with you is our Sneak Peek Wednesday, and this is when I extend my morning watch list build show, and you stay actually in chat for about an hour after open. You're there till about 10:30. You get to see the same platform I'm streaming in chat. I'm streaming you on YouTube live. You'll see me go in trades, out of trades. You'll hear me talk about them. You'll hear me interact with the traders in the room. You'll get a good sense of what every day is like in our chat room in just this 1 hour. And I feel that that's the best way for you to really get a feel for what's going on. And any questions you have or any feedback you have from those videos, feel free to get in touch with me, let me know. But don't forget, you can tune in to these from my website as well, averagejoetrader.com. Just go to the home page and you'll see the screen, and when it goes live, just enlarge it and you'll have full view right there. Alright, so learning to lose so you can win big. I know it sounds bad, but losing is truly a part of winning in day trading. And by the time I finish this, I think you'll understand why we say that. Now, if you seriously want to become a truly consistent day trader, you must learn how to lose in addition to actually learning how to trade. It's a very, very important concept that you're going to have to accept. Now, here's a fact. You will never make money as a trader if you don't understand the importance of losing the right way. It's not going to happen. You may get some instant success by luck, but you will not sustain a career in day trading if you don't understand the importance of losing properly. Those of you who come into day trading and you're looking for easy money and not taking any losses, you might as well quit trading now. Save your money and do something else. I'm not gonna sit here and say give me your money and I'll teach you. It doesn't work that way. You have to be serious. You have to be serious about your learning and serious about spending the time that you're going to need in order to learn how to day trade properly. And it does take a process. The number one reason day traders fail is due to the uncontrolled emotions they feel caused by the experience of losing money in trades. That's what gets most traders down on themselves and starts that downward spiral that they have no way to get out of. It's not due to lack of education. It's not due to anything else. It's not due to not having enough capital. It's due to the fact that these traders cannot control emotions that's caused by experience, that's caused by them losing money. Now, financial loss is linked to the area of the brain that responds to pain and fear. So when we lose, it's normal for our bodies to try to protect ourselves from this pain and fear that we experience. So it can cause us to do so many different things. Our body will respond in so many different ways to try to protect us from ourselves. Sometimes it keeps us going into a downward spiral. Because to be honest with you, day trading goes completely against human nature. We have to figure out how to separate our inherent fears that we learned growing up and convert ourselves into the type person we need to be, or transform ourselves into the type person we need to be as a day trader. You know, I see new and inexperienced traders put all of their energy into preventing losses. I mean, everything they do is about not losing at all. And that's another way to just never get ahead in this. You have to accept that you're going to lose. You know, trying to putting all of your energy into preventing a loss is going to result in blowing up your account and damaging your confidence beyond repair. You know, if you're not able to accept small calculated losses, you're going to take bigger and potentially devastating losses. As a trader, you need to simply view losses as a cost of doing business in the market. Just like trading commissions and fees are the tools necessary to trade, you know, that's an expense that you know you have to incur. Losses is part of that expense. You know, think about if you're in the restaurant business and you can't keep food forever. Food is perishable. So there's going to be times where you have to get rid of the food. You have to throw it away. This is money that you're throwing away in the trash. But it's acceptable losses. It's small calculated losses. You know, the owner decides how much food they're going to prepare, how much they're going to cook, how much they're going to buy and have ready. And they know that there's going to be a certain amount of loss, and they're ready and willing to accept it. As a trader, there's a certain amount of loss per trade that we need to have that we can accept. All right, and we're going to talk a little bit about that in a few. Now, here's a fact. This isn't something that I pulled out of my backside. This is a proven fact. There's been studies that show we hate losing 2.5 times more than we like winning. This is the main cause of revenge trading. And you know, we start to blame others for our failures. We never take responsibility for us and not making the right choices. You know, we start blaming everybody else, and we fall into that trap because we're trying to get over this bad feeling that we have, this feeling that's continuing to stick with us. We're trying to get over it, and we're trying to put the blame on everything and everybody else so that we can feel that sense of relief. But the reality is, losing emotions stay with us much longer than winning emotions. Just think about it. Just go back. If you won a big game, or if you won something, that good feeling doesn't last as long. But when you lose and you get hurt, that thing, it can get into your mind, and you relive that loss over and over and over again. So we have to learn how to flip the script, is what we have to do. Alright, now traders experience pain and frustration from losers for two reasons. Number one, they expect to win on every trade, but instead they lose. And they lose more money than they're emotionally prepared to lose. And this is what, new traders who don't exercise the proper risk management, they just want to put money on a trade that somebody called out that they think knows what they're doing and make money. And it just doesn't work that way. So these things you can fix very easily. You have to be honest with yourself and face the reality that you will not win 100% of the time in trading. Now you can do things to stack the odds in your favor, but there's not 100% guarantee that you're going to win on every trade. And you have to understand that any one trade can be a loser. I can think of several trades I took this week that I sat and waited for the setup. It set up, but the trade failed. One time I should have taken profit when I had it, and I didn't. I was just being greedy, and I could blame that on myself. But there were times where it worked, and it never followed through. It set up, perfect setup, same trade setup I've been taking forever, and it just didn't set up. So any trade can be a loser. I didn't get mad. I just accepted it as lost and moved on. Alright, so how can you learn to lose? You have to accept that you're gonna have losing trades no matter what you do. I don't care if you spend the most money on the most elaborate automated trading system out there. It's going to lose, because the market is going to do what the market's going to do, regardless of how good a trade set up, how good a pattern set up. It doesn't matter. You have to accept that they're going to be losing trades. Then you need to determine how much money you're willing to lose per trade. Like for me, when I'm starting at $1,500, I started small, and my max loss is $50 per trade. Now, does that limit how much money I can make? Yeah, it limits it. But right now, we're not thinking about money so much. We're growing our account very small in steps, and we're learning the skill of trading. And this is part of the skill. Learning how to lose is a big part of that skill of trading that we have to learn before we can start blowing up big. And I mean blowing up in the good way, not the bad way. Once you determine how much you're willing to lose, then you're going to base your position size so that you have enough room to allow the trade to work. Because you can say, I have a $50 max loss, and you go in with 500 shares, you don't have a stop, because as soon as it ticks against you, you're going to have to stop out. So it makes absolutely no sense. So you have to calculate your position size, and we're going to look at that here in a second, based on how much money you're willing to lose. Alright, so let's take a look at, this is UL. This is a trade I took yesterday. Okay, and I like to start pre-market. I have developed a strategy that I love, and I can make my daily goal pre-market every day if I'm able to be in front of the computer at 8 o'clock. Well, I'm not saying unfortunately, but I take my son to school every morning, and I'm not back until about 8:20 And a lot of times these moves have already taken place and I don't get to catch them. But when I am and I do get to catch them, I love these. So here is a trade that I took on UL yesterday. So what was my thought process going into this trade? You know, that's what we have to look at. What was my thought process? Okay, I know the most I wanted to lose was going to be $50. Okay, so going into a pre-market trade, I'm gonna say, you know, I'll go in 200 shares or 100 shares. So 200 shares, I got a 25-cent max loss that I can absorb before I lose $50. So I'm gonna have my max loss as a stop, and that's going to be, I got in at 47, so 46.75 is going to be my max loss. So this trade was being based on this level here, 46.92. And what I like to do is find a level of support that I can base this trade off of. Now I could have done another thing. I could have said, okay, I'm going to base this off of the VWAP here. And now the VWAP at the time was around 46.70, just below 46.75. So I felt, okay, that's great. I can give it 25 cents, but I'm not expecting it to pull back to the VWAP. If I expected it to pull back, then I could give it 50 cents. Or I could give it 30 cents. I could go in with 150 shares size and give it 30 cents. So that I could allow for a test of VWAP here. So I'm accepting the fact that I'm going to lose $50, and now I'm working on my position sizing as to where I would potentially get in. Now I know this sounds like a lot to think about during the heat of battle, and it is. And some stocks, when you first start, you're going to miss them, and you have to be okay with missing a trade. But you have to develop this thought process, and the best way to do it is in the simulator. Now I spend a lot of hours using on-demand at night practicing this so that I can do it very quickly. And that's why I always use whole numbers when I'm going in my trades, because I can quickly calculate my stop using whole numbers. So that's why I use, you know, 100, 200, 300. Sometimes I use the 50, but for the most part I'm using those, you know, whole numbers. So I get in, I've got my stop set, I know exactly where my stop needs to be, so I've determined my position size, and here I determined 200 shares. And that's what I mean when I say that you have to I can't get this to go back, sorry about that. But that's what I mean by when you figure out your max loss, then you have to figure your position size. You know, determine how much you're willing to lose per trade, and then you base your position size on that. But just remember, your max loss doesn't have to be your technical loss. You just want to make sure that your max loss is beyond where your technical loss will be. Because if I had a candle to close below this level and I still haven't hit my max loss, I'm going to take it off, because technically the trade plan is dead. It's probably going to come back and eventually stop me out. So no, it doesn't make sense to sit here and wait for your max loss stop to get hit if you lose your technical level. So don't get those two stops mixed up. And I'm going to do another little lesson like this on how I use my stop loss. But I've always have two stop losses. I have my max loss, so in case the stock goes very badly against me, it'll stop me out real quick. And I have my technical stop, which I control. So I still have control of my trade. I still have control of it. I just have some training wheels down here so that if it runs away from me, I won't get that deer in the headlight look. So it's very important for you to establish a max loss per trade, and then make sure you use the correct position sizing so that you can allow that trade to work. Alright, then you want to trade to hit your marks. Okay, trade for the skill, not for the money. Right now, what we're trying to do is we're trying to develop the skill that we need in order to be successful and to be consistent. If you trade just for money, you bring emotions into it, and I've already told you that when you're dealing with money, that taps into the part of the brain that deals with fear and loss, and that's a bad thing. So you don't want to tap into that. You want to reprogram it to where when you're trading, when you're actually in the trade, you're not thinking about money. You're just thinking about hitting your marks. And we're going to go back to this chart so that I can show you what I'm talking about. Okay, so I get in this trade. I've already figured out where my stop's going to be. I got my max loss stop. I got my technical stop. Alright, now where are my profit targets? My profit targets are going to be the levels of support or resistance that I run into. So in this case, I'm going long, so I'm looking for resistance. Here's my first level, 47.42. Okay, so I took it off at 47.40. So right at that level, that's my first target. So all I'm caring about, I'm hitting targets. Okay, so I just made 40 cents on 100 shares. I took off half. So that's 40 bucks. Okay, so I made $40. I'm not thinking about that. Does that $40 cover the $5 commission that I have? Yes, it does. So my next goal is to get up here to 47.91. That's about 50 cents away. But as you can see, we got to push up, but it pulled over, pulled back, and it hit my profit stop. So once I take profit, I automatically move my stop to break even. Once I get a candle to really give me a move above this level, I move my profit stop up, so that worst case scenario, I'll make 20 cents on the remaining part. And that's what happened here. Came back, I stopped out at 47.20. That's where I had my profit stop. Okay, then this was setting back up, so I get back in. And again, I'm looking to hit my marks. Unfortunately, this didn't follow through. It didn't have the legs at that time. And we started to pull back. So I went ahead and got out here. Got out the rest at break even. So all I was doing was hitting my marks. Concentrating on hitting my marks. Here's the short on the loss of this level. Where's my mark? This is my ultimate target here. So I lose half. Halfway down, I'm going to take half off. These are my targets. 47.50ish. That's halfway down. So I got out here. Trade started to turn around and pull back. I got out on my profit stop, because I knew if this thing came back, we would retest this again, and my goal was to get back in. And here it was. I got back in. Bam, first target. And then stop out on profit stop. All I cared about was hitting my targets. That's it. And also, you never adjust your stop loss to avoid a loss. You don't adjust your stops. If you're long, you absolutely adjust your stops down to bring profit in, to protect profit. But you never raise your stops to establish a loss. You don't want to establish this bad habit. Now, there are some people that will average in. If they start going the wrong way and it hits their stop, they'll add more size so that they can raise their stop some more. Add more size and raise their stop some more. But if you don't have an unlimited amount of resources, you can blow your account up on one trade. Now, sometimes this does work. Eventually, the stock's going to come back down, and it may just work for you. You know, you never know. So if it does, what happens is you establish a bad habit, and that's not one of those habits that you really want to establish. And I say again, if you just miss this lesson, it could potentially be the biggest mistake you make. Now, you don't have to address it the way I address it. You just need to make sure that you accept the fact that you're gonna lose in trading. That no matter what you do, how you do it, you're gonna have losses. You're gonna incur them. And you want to accept those as a cost of doing business. Not to dwell on those facts. And not to avoid losses altogether. You want the losses when they come to be manageable. Okay, and that's the only way to win at trading, is to control and manage your losses. And you manage that with the proper risk reward. And just like owning your own business, your income must exceed your operating costs. Your operating costs not only is your platform fees and the tools that you use to trade, but it is the cost of trading. It's your commissions, it's your fees, and it's your losses. But the loss has to be an acceptable loss. It's got to be within your risk parameters that you've already set prior to what you're trading. So that's very important. So I can't stress enough how important this is. So if you have issues with your psychology, if you have issues with losing, anything to deal with the psychology of trading, you want to look into taking this Day Traders Mindset workshop. Now, it's $450, but it's over 4 Saturdays. They're 4 90-minute sessions, and they're small group interactive sessions. Now, if you're already a member of the Average Joe Trading community, you're a yearly subscriber, you will get a discount on this. So if you're interested, make sure you get with me personally, and I'll let you know what the discount is. But it's for 4 Saturday morning sessions. Now, if I get enough that guys together that's in close to the same time zone, I have done this class on Sunday evenings. So whatever I need to do, if I get enough traders that want a different time, I'll make it work. But it is a live session. It's not recorded, because every session is different. The traders are different. Their thoughts are different. What they need will be different. So the sessions are identifying your trading self, emotions that destroy trades, the confidence, building confidence, and then in the end, we put it all together and try to show you how to be that calm, cool, and collected trader that I am 70% of the time. Now, if you're in chat, you know what I mean by that. I'll be calm, cool, and collected about 70% of the time. The rest of the time, you'll hear me fighting myself. Coming in March, we will be starting the day trading course called Day Trading the Average Joe Way, and it covers extensively the principles that I try to share with you in chat every day. From my strategies, from how I do my stops, how I do my profits, how I plan my trades, everything. It's gonna cover everything that it took me to get to where I am today. And it's not gonna cover things that's not important to you. You know, for instance, I don't use Bollinger Bands, so I'm not covering that. Why cloud your head with something that doesn't fit what I'm trying to teach? Now, if you want to use another strategy, or you trading other strategies, that's fine. Then they may use Bollinger Bands, and you may want to know what they are. But we focus on just what you need to trade consistently, you know, and make money. These will be live small group classes again. No, they're not. They will be recorded so you can go back and watch them again if you want to. But the initial class will be live so that it can allow for discussions and interactions. You could share your screen if you need to, if you want to show something. We'll be on the microphone so you could talk. I'll ask questions, you answer. And accepted the deal for the simulation program that I'm going to use. All I'm waiting for now is the logistics to come back. It's a simulator that you can use at night, on the weekends. It replays the market just like on demand on Thinkorswim, because a lot of you don't have access to Thinkorswim, and you will get this as part of the class. Now, we will offer it as a standalone simulator in the community, but this will be a part of the day trading class. So I want to make sure that we have everything and all the tools in place that's going to help you be successful. Now, for our day trading education chat room, I met with my team. We've talked about it, and for now, we are capping this at 250 traders that can come in at a time. Like right now, we have about 170 subscribers, 175. But the most that we have in the room at one time is probably around 130. So people come in and out at different times. So we feel we can offer our services to more people because the times of you coming in and out are going to offset. And my main focus is making sure I give you guys the attention that you need to be successful. Now, we offer the monthly subscription. It's $69 a month, and this gives you a way to come in and really get involved in chat and see what we do all day. You have access to the trading education chat room, the daily watch list. Bill, my scans and my platform are streamed all day in chat. We have a live news feed running as well. And when I get to the daily recap videos, you'll be seeing those. Now, the yearly subscription, you know, once we hit 250, this is it. Now, any time after that, the price may be different. I can't promise you that we're going to keep this the same. But right now, if you get a yearly subscription, it saves you over 50% over the monthly subscription cost. And one of the deals that we have is if you sign up for a monthly, you have 2 weeks to convert that monthly subscription into a yearly where you only pay the difference. So instead of paying $3.99, you'll just pay $3.30 because you've already paid the $69. So you do have 2 weeks to decide once you come in if this is really what you want and this is what you've been looking for. Convert it, and you can take advantage of that deal. And so the yearly subscription, they get everything, but they get to participate in small group mentorship meetings that I'll run. They get access to the education webinar that I do every week. I do it Wednesdays at 4:30. It's 90 minutes, and I do record it so you can go back and watch it as many times as you want. And this is something that I feel is unique and is very critical in your development as a trader. You have the ability to establish private trading study groups where you can meet in the chat room. I give you access, I give you presenter access during that time, and you guys can share charts, talk, discuss your trades, your thoughts. And I sat in on one Thursday night. I caught the end of it, and it was some awesome discussion going on. And I think this will help bridge that gap. And it's something that I brought over from my teaching career. Now, I felt these small study groups amongst your peers really help you develop. And so this has really gotten a lot of positive feedback. And those traders who are taking advantage of it, I feel are really reaping the benefits of that. So if you want to contact me, I've got my YouTube channel, Average Joe Trader, Twitter at Average Joe Trader, but you got to drop the E on it. Facebook, Average Joe Trader, and the Average Joe Trader at gmail.com, or the new one that you can reach me at is going to be let me put this up here for you. You can reach me at ed@averagejoetrader.com. So you can reach me there as well. Both emails work, and I monitor both of those practically all day. So again, if you have any questions, feel free to reach out. We'd be glad to have you join the community. We're all about education. We're all about being transparent. And I'm all about teaching you the right way to grow your account so that you can sustain a career in day trading. It's a process, and you have to stick to that process, and you have to be committed to the process. And by doing that, you're gonna give yourself the best chance for sustaining a career in day trading. So that's it for me today. I want you to trade smart. Make sure you trade for skill and not money. I think I've shown you why I say that all the time. Why it's important to trade for the skill. Because if you're trading for skill, all that emotional baggage that comes with money stays on the sidelines. So you guys have a great weekend, a nice extended weekend. Enjoy the extra day off on Monday, which we traders hate now because we love working. But got to enjoy that day some kind of way. And I will see you guys bright and early on Tuesday morning.